Wall Street ended lower on Wednesday after the Federal Reserve's minutes showed central bank officials were divided over the need for more interest rate hikes at their last meeting. The Dow shed 0.5%, the S&P 500 lost nearly 0.8%, and the Nasdaq shed more than 1%. The minutes of the Fed's July meeting showed most policymakers continued to prioritize the battle against inflation, creating more uncertainty for investors as to whether or not the Fed is actually done raising interest rates. The minutes come as Fed officials prepare for their annual meeting in Jackson Hole, Wyoming next week, where Fed Chair Jerome Powell is expected to speak and likely, quote, stick to the party line, says Ross Mayfield, investment strategy analyst at Baird.
While we've seen a little bit of softening in the labor market, it's still imbalanced in a way that makes them uncomfortable. You still see wages pushing on overall price inflation. So I think next week it's going to be very much more of the same, which is more hawkish than probably the market would like, indicating that additional rate hikes could be on the horizon.
Among individual movers, bank shares extended losses, with the S&P 500 bank index down and Bank of America down more than 2%, leading losses among bigger banks. NVIDIA also reversed early gains to close down 1% after rising in the last two sessions, as two more brokerages raised their price targets on the stock ahead of the chip designer's quarterly results next week. And Target shares gained 3% after the big box retailer's second quarter profit beat estimates.